Nestor Charias was 60 years old when the U.S. Attorney's Office for the District of New Jersey announced he had stolen more than $48 million from his employer. It happened over 17 years. And for almost all of that time, no one noticed. Charias worked at Harrison Scott Publications, a financial publishing company based in Hoboken, New Jersey. The company didn't print gossip. It published detailed business newsletters covering commercial real estate, hedge funds, and commercial mortgages. Charias wasn't a low-level clerk. He was the controller. He managed the company's internal finances and oversaw payroll. Harrison Scott didn't process its own payroll in-house. Like a lot of mid-sized companies, it outsourced that job to an outside payroll processor. Charias was the point of contact. Every pay period, he was the one who sent that outside company the payroll instructions, who got paid, how much, and why. Starting in 2002, Charias began adding a line to those instructions that shouldn't have been there. He told the payroll processor he was owed a bonus, hundreds of thousands of dollars, in a single payment. Nobody at Harrison Scott had authorized it. Nobody at Harrison Scott even knew it existed. But because Charias was the controller transmitting the official files, the outside processor had no reason to question it. They processed the data as submitted, and the money moved straight into accounts he controlled. This wasn't a one-time slip. Federal prosecutors say Charias repeated this exact scheme on numerous occasions for the next 17 years, from 2002 through June of 2019. Same routine every time. A fake bonus instruction, hundreds of thousands of dollars, processed by a vendor that trusted his submission by default. By the time it ended, the total came to more than $48 million. Prosecutors said Charias spent all of it on personal expenses. On January 27, 2020, Charias appeared in federal court in Newark before U.S. District Judge Kevin McNulty and pleaded guilty to one count of wire fraud. That single charge carried a maximum statutory penalty of 20 years in prison and a $250,000 fine, or twice the amount he'd stolen, whichever was greater. The FBI's Newark field office, under Special Agent in charge Gregory Airy, had led the investigation that built the case against him. On October 18, 2021, Judge McNulty handed down the sentence. 75 months in federal prison, just over 6 years, for stealing more than $48 million across 17 years. He also ordered 3 years of supervised release, restitution of $43.4 million, and a forfeiture order covering the full $48 million. What makes this case stand out isn't technical sophistication. There was no hacking, no forged signatures, no offshore shell companies. Charias simply held a position where one man's word was enough to move hundreds of thousands of dollars at a time. And for 17 years, no second signature was required, no cross-check was performed, and nobody asked to see the raw files. Over $43 million moved through that single gap in oversight before anyone finally asked a question.